So today we are going to go over just the super down and dirty parts of futures. Trevor asked me to let me pull up his DM real quick. Asked me to go over what futures are, how they differ from options, and how to use my alerts for different markets. So first things first. Obviously, none of this is financial advice. Um, you can read the disclaimer. I'll leave it up for a minute or two, but I'll give you my words instead of the usual what everybody else says. You should never ever take alerts blindly. Um, it doesn't help you in the long run if you don't know when to buy or sell. Some alerters don't always alert. Some of them have delayed alerts. Some of them just flat out forget about a trade. And if you are just sitting there, with twiddling your thumbs with a position that's down, 30% of your portfolio, um, it's just not a good place to be. And the simple way to get around that is to just take full responsibility for your trades. Um, the reason why this server has analysts in it, and quote unquote analysts, people who are good at trading, is because we have been profitable and for a while, and we have a strategy that can be replicated. Um, my trade ideas are never ever signals. They're never, I'm just telling you guys what I'm doing. And when I first started, it was the same way. I always, there was a guy named Kindred, who some of you guys may know. When I first got onto Discord, I was like, oh, dang, these guys are pretty good. If I just buy and sell when they do, why wouldn't I make money? And then, sure enough, he forgot to say an alert, or, his trim was too wide, or his stops were too wide, anything like that. And I was just waiting for him to alert. So you guys need to really look at our alerts more as trying to figure out why we entered, more than just a buy or sell. So none of this is financial advice. This presentation is just going to be what I know, and just for educational purposes, just to help you get a little bit better than you were before you came to the class. So a futures contract is a legal agreement to buy or sell. Real quick, everybody can see what I'm streaming, right? PowerPoint.
Yes.
Okay,
Yes.
perfect. All right, so futures contract is a legal agreement to buy or sell a particular commodity, asset, or security at a predetermined price at a specified time in the future. A buyer of a futures contract takes on the responsibility to buy that underlying asset at contract expiration, and a seller is the opposite. A futures contract allows an investor to speculate in the direction of a security, commodity, or financial instrument, either long or short, using leverage. So you guys know that I trade futures, trade the ES mainly, right? So S&P 500 futures. But futures, the futures market, you can bet on wheat going up or down. You can bet on oil going up and down. You can do NASDAQ, the ES, which is SPY. You can do oil, gold. So you can do anything. I just specialize and like doing ES, which is the S&P 500 futures, and some NASDAQ, but NASDAQ kind of moves a little bit more sporadically, while ES is more structured. So I'm going to play a couple videos, because while I was typing up this PowerPoint, these videos were really good, and they gave a pretty good explanation that is easier to listen to than hearing me read off a script. So let me know if you guys can hear this.
A futures contract can protect.
Can you guys hear that?
No.
No. Okay. Well, that's problematic.
Share your screen, not your application.
Yeah, I am.
Or your application, not your screen. Other way around, my bad.
Producers and suppliers from price
There
change.
you go.
Okay.
A futures contract can protect producers and suppliers from price changes. Al's Ice Cream buys milk from Tim's Dairy to make its ice cream. The price is $2 per gallon. At this price, Tim profits from the milk it sells, and Al's profits on every ice cream cone it sells. One day, a new dairy opens and the number of cows doubles. The extra milk pushes the price of milk down to $1 a gallon. Al's is making more profit as costs drop, but Tim's is losing money. Later, a sleeping sickness knocks out 3/4 of all the cows. Milk rises to $4, and Al's profit per ice cream disappears. Both companies want to avoid this price volatility. They both meet with an investor. Each company negotiates a separate contract with the investor. For Tim's Dairy, the contract states that if the price of milk goes below $2, the investor agrees to pay the difference to Tim's. If the price goes above $2, the investor gets to keep the profits. Al's contract with the investor works the opposite way. If the price of milk goes above $2, the investor pays the extra money and Al's gets milk at a predictable $2. If the price dips below $2, Al still pays $2 and the investor collects the profits. By locking in the price of milk, a futures contract allows both Al's and Tim's to transfer their potential risks and rewards onto the investor.
All right, and I got one more here.
Futures contracts are a type of forward contract between a buyer and a seller of an asset. They agree to exchange goods and money at a future date, but at a price and quantity determined today. Futures contracts differ from other forward contracts because they are actively traded in secondary markets, like the Chicago Mercantile Exchange and the Intercontinental Exchange. Futures contracts have a wide range of underlying assets from commodities like coffee, corn, wheat, currencies, and metals, and from stock indexes like the Nikkei 225 or the S&P 500. Futures markets serve companies or businesses who want to protect themselves from price volatility in different securities, as well as investors or speculators who try to profit from the change in price of an asset. Other aspects to note about futures contracts: they are standardized, regulated, and free of counterparty risk, since exchange clearinghouses guarantee that traders in the futures markets will honor their obligations. To start trading futures, an investor selects the asset they want to trade and makes an initial margin deposit with a broker. The broker will then place the trade for the specific asset with the clearinghouse. A maintenance margin is required in order to keep the account active. Consider a long position of 3 September corn contracts, each of which covers 5,000 bushels. Assume the contract price is $3 per bushel and that each contract requires a margin deposit of $300 and a maintenance margin of $200. The total initial margin deposit would be $900 and the maintenance margin for the account would be $600. If the price of the bushel increases 4 cents to $3.04, then the investor gains $600. 3 contracts times 0.04 times 5,000 bushels. However, if instead it decreases 4 cents from $3 to $2.96, the investor loses $600. The account deposit would be reduced to $300, and the investor would need to deposit $600 of variation margin in order to get the account back to its initial margin.
All right, so let me see if there was other content on here. I don't believe I had anything else. Nope. All right, so let me switch back to my PowerPoint. Share screen. Screen. All right, so we should be, all right, make sure everybody can see the PowerPoint again.
Yep, you're good.
Okie doke. All right, so as you saw in that last example, it's a really good way to see how futures kind of differentiate from options, right? So for options, and you'll see it on the next slide that I say, or I have, options don't, or futures contracts differ from options because they don't have Greeks and they do have an expiration date, but they're not like, you can't buy weekly contracts. They're, at least for ES and NQ, which are what I primarily trade, they expire quarterly. So we're not worried about theta, we're not worried about delta or volume on contracts or anything like that. This is one of the more most widely traded markets, even more so than options, because you're talking about institutional trading, right? JP Morgan Chase isn't going to be buying an out of the money Tesla contract more frequently than they would a futures contract. So they're going to be more institutionally traded as well. So an ES, so when you see my trade ideas or trade alerts, ES is going to be the S&P 500. NQ is going to be NASDAQ. Like I said, I don't generally trade NASDAQ, but it is a futures contract that you can trade. Those are the abbreviations. One tick is going to be a quarter of a point. So the difference between 4,000 and 4,000.25. So every 0.25 movement in the underlying asset is going to be a tick. 4 ticks is going to equal a point. So the difference between 4,000 and 4,001. ES moves, this is very important for futures contracts. ES moves $12.50 per tick, aka $50 per point. So if if I have a 2 point stop loss, if you buy one contract, or for my one contract, if I buy, per contract, I'm going to lose $100 if it hits my stop loss. And then NQ moves $5 per tick, or $20 per point. Biggest piece, and I saw some people talking about it earlier in the chat. If you are coming from options, or even if you're not, you should absolutely paper trade on. I would recommend Tradeovate, because you can trade either on TradingView. You can sync your Tradeovate application onto TradingView, or you can trade on Tradeovate. But that way you're getting to know how price moves, and if it's a wider play, 5 or so points, and you see minus $200 because it's close to stop loss, you know what that's going to feel like, at least a little bit before you're putting your real money on the line. And then you also know how to get in and out of positions. So with that being said, when you do start to trade futures, I traded micros to start, and to trade micros, they're just going to have the letter M before the abbreviation. So, for example, on Tradeovate, ESU2 is what contract we are currently on. ESU, and on the next slide we'll kind of explain what the U means. And so we are, it's going to be MESU2. And so micros are going to move 1/10 the size of a mini, and so you're going to gain or lose a tenth of the size. So $1.25 per tick, or $5 per point in ES. And also, we'll pull up margin requirements for brokers, and you'll see that you need a tenth of the margin requirement as well. So if you're not, I believe most accounts need a $10,000 deposit to start, and so if you don't have that to trade a full mini point, a full mini contract, then you can trade micros, micros. All right, and last slide here, then we'll start pulling up some real examples. So futures, like I said, they do not have Greeks, weeklies, or strikes. They move linearly with the underlying asset. So if ES moves up 1 point, your contract gains or loses 1 point of value. If you remember, it's going to be $50 for a mini. Futures do have expirations quarterly in December, March, June, and September. H is December, M is March, U is June, and Z is September. And last but not least, this is how to use my futures ideas. First of all, like I said on that last point there, always do your own due diligence. Before you enter a play, you should have your own idea of where your stop loss, take profit, trims, and all that are going to be. For me and myself, I believe our next lesson is going to be over trade management. But I do trims if I have the ability. So like on my funded accounts, I can trim every 50% if I want to. And so, you know, I just trim a certain amount per. So if I have 10 contracts, then I can trim one contract at 50%, one at, or 100%, one at 150%, so on and so forth. And then I'll just have runners. Trade management's one of the more complex topics because a lot of it is going to be dependent on you, the trader, because you need to find out psychologically what you can handle. So for me, I like to have more money in the bank quickly. I don't like to see the floating, you know, $2,000 profit that goes down to $200. That messes with me too much. I'd rather pocket $500 to $1,000 in a play and then move on to the next one, and let my runners run. But as far as how to use futures alerts, when I say long, it means I'm bullish. So it's the same for an option as buying a call. When I say short, it's the opposite. I'm bearish. Same bias as buying a put option or selling a call. Selling ES means I'm going short. So when you see that, you'll see what I entered at. My bot has usually less than 1.5 seconds of delay, but also by the time I type, sometimes you'll get a better entry than me. Sometimes you'll get a little, you know, a point or two less than me. Do not ever chase. So if you're getting a huge candle down or up in the direction, don't ever chase. Wait for another entry. I'm always trying to play with whatever I think the trend is going to be for that day. So if I'm correct on that day, you know, the days I have 1,000 plus percenters, you're going to have many entries. Buy ES is going to be the opposite. Then always make sure you're looking for volume on your options. If it doesn't have enough volume, you likely will not be able to get filled at an adequate level. So for example, SPX is going to be the most closest to an ES futures contract without having a futures broker. So you would look at futures contracts, or sorry, SPX contracts, and see my futures alert. Make sure you're seeing the same thing I am, and then you're going to pick whatever contract you think is going to be have the most gain potential. You know, and a good way to find that out is going to be looking at where a price target would be. So after this slideshow, we'll pull up a chart from today's calls and just go over each of them and show how to what I would be looking at as an options trader seeing my futures alerts. But you would be looking for, you know, okay, he's going long. Where's his price target? Okay, it's 3,800. Let me look for a 3,800 call, or something of that nature. Do I have any questions before we transition to a new topic?
I have one.
Yep.
So I guess what is like the price or the entry point of a futures contract? Because I understood that it raises 50 or lowers 50 based off of 1 point, or 1250 based off of a tick.
Mm-hmm.
But what's like the price of your entry, if that makes sense?
Yeah, so unlike options, it's going to be linear, so there's no cost to enter other than commissions and fees. So I'm not sure if that's what you're asking or not. Let me see if I can pull up a demo account. Let me create a demo account real quick on Tradeovate. Actually, I'll share this with you guys. So go to, if you're going to open up a demo account to PaperTrade, go to trader.tradeovate.com. trader.tradeovate.com, and then you can sign in with Google. I have a lot of those, Expo Jesse, and then a number after. And then this is what it will look like. I believe our next lesson, if I'm not mistaken, next week is how to set up this platform, but if we have time today, we can do a brief overview as well. So futures are not closed yet. So this is, again, a demo account, demo. So if I hit sell right now,
Order filled.
I'm in. I'm down $12.50 because I got in at 75, and to buy, because I sold at the bid, I have to buy at the ask. So the ask is still 37.61, so I'm down one tick. So there is no cost to enter other than commissions and the spread. But depending on your broker, your spread's going to be, a good broker is going to have anything from 25 cents to my Forex funds has, I think, 40-cent spread. If your broker is doing something wider than that, I probably would be looking for another broker. There's a ton of them, so don't ever limit yourself to, okay, I like TD Ameritrade actually from what I was looking at, because I'm a funded trader, so I don't have to worry about margin at all. But TD Ameritrade has some of the worst margin requirements. I believe you have to put up all your money, 100% of your margin requirements up front with TD Ameritrade. So other people will let you do 50% or less. I have a Word document here. So like E-Trade will let you put up 50%, or overnight you have to have 100%. So these are all the brokers here. But to answer your question directly, there is no fee to enter a trade other than the spread and commissions. And I'm up $12.50 already.
Order filled.
Any other questions? We're just going to go briefly over brokers and then open it up for general questions. But any questions over what futures are, how much they move, stuff like that? Okie doke. All right, like I said, I didn't make this, but this is a good overview of futures as well. So we're going to go over the brokerages. We have Trade-of-8, which is what I use and would recommend for a lot of people. TD Ameritrade's good as well if you have a Roth IRA in there. Maybe don't trade futures on your Roth. That's not financial advice, but for how much they move and how little you can deposit into a Roth, futures are probably not your best bet, but you can. But if you have, just general money in TD Ameritrade, they are a good option as well. E-Trade, if you're in Canada, Interactive Brokers, or even if I think they do US as well, but I don't use them, so I'm not sure. Tastyworks and Ninjatrader is also widely used across the futures field. Charting, I use TradingView. I believe I pay $35 or something like that for the premium features with alerts, and then also for the data package. You can also use Thinkorswim. Trade-of-8 is also very good, but you do need to pay for data unless you are funded through a prop firm. And then usually they will pay for that because you are their trader, and so they'll pay for your data package. Or Sierra Chart, I haven't heard of. Jigsaw, I haven't heard of, but Ninjatrader I have. Ninjatrader, you can use bots. So if you know how to program, you can use bots and trade automatically. I've seen some of the strat bots on NinjaTrader, but it looks kind of like this. So essentially the same thing. They all want to be user friendly. And then if you are not funded, then you will pay for a subscription for NinjaTrader. So for margin requirements, I use Trade-of-8, so that's what I can tell you about. You have to have an initial margin requirement for ES of $11,550 for a full micro or full mini contract. NQ, as you can see, is a little bit higher, so about $4,500 more, or $5,500 more. Micros are different. So MES, remember, micro ES, you only need $1,200, and you need $55 per contract. So you have to have an initial, and then whatever they say they want you to have for your margin requirement. So you have to have $55 in the account to cover, essentially, is what they're saying. And let me switch to my other one. Here's your fee breakdown for Tradeovate. So we go down here, E-mini, ES, go across, you're going to pay, if you are free, so don't pay any subscription, you're going to pay $2.18 per contract for a full mini contract. For a micro E-mini, you are going to pay 66 cents. So micros are obviously going to be more expensive. You know, they're a fourth of the price for a tenth of the movement. So you got to make sure you're not cutting profits too quickly, because on micros with commission, you don't want to pay more on commission than you are making. So that is pretty much all I have for educational content for this session. We went over, these are all on, and I'll link you guys the PowerPoint wherever Trevor or Carlos have me send it. We'll have a recording and a link for the PowerPoint and a Word doc that I've used so that you guys can do your own due diligence and read over that. But we will quickly go, well, not quickly, we have about half an hour left. We'll go over my trades for the day. We'll do that every day that I trade in one of these classes. We have 4 more going on. And we're going to, I think the last one's prop firms, so we'll probably have some time after that to do a lot of just general questions. Our next session is going to be over, well, we kind of covered how to trade and where, but trade management, which is going to be a pretty big one. So this one's just the down and dirty, how futures work, where to trade them, so that you guys can be paper trading or real trading, whatever you want. When I do trade tomorrow and Friday, I will be out of town. It's TBD if I will be alerting or not. I'll be on the golf course all day, so I don't know what my reception's going to be like out there, but I go on a golf outing once a year around this time, so I will definitely be sending levels to look at on ES for you guys. And like I said, your ES contracts can be traded very similarly, or your SPX contracts can trade very similarly to an ES contract. So if I charted on ES, you can play that for SPY or SPX. Just make sure you're doing your due diligence, because I can't see, you know, if we have enough volume and whatnot to really give you a good idea. So make sure you're doing your own due diligence there. But let me pull up trades from today. All right. Can everybody see TradingView here?
Yeah.
All right, so you'll see sometimes when the June contracts, so we're on the September contracts currently, when the June contract, so I think I have the letters mixed up in the PowerPoint, but we are on the September contract expiration, which are technically June to September contracts. The ticker's going to be ESU 2022. So ES is E-mini for the S&P 500, U is the contract expiration, and then the year. So let's go over. So generally, when I don't even have an alarm set until 9:30, because I don't trade the first 15 minutes of the day. Because generally speaking, if I pull up another chart, the first 15 minutes we're going to see a flip. So let's see, 9:45, right? So if you traded the first 30 or 15 minutes yesterday, you saw this to this, right? And so you're thinking we're up in a bullish trend. I don't trade till 9:45 to 10:15. I'm looking for, and if you were in my live trading call today, I look for purely reversals, right? So I'm sitting here 9:45, have an alarm set 212, So yesterday that would have been a trigger to go long, but I'm still looking short. And then you see this trigger here, and we'll go over. I'm not sure if Jason Paper Gains doing a lesson on the strat.
I haven't set up one with him currently, no.
Okay. Well, even if not, then you can see in DD's channel, and I'll see if we can find somewhere for that to be a little more permanent. But I play, like I said, basically just a variation of the strat. So here would have been a good entry trigger. But anyway, all things aside, I don't trade till 9:45. So my first alert today was 9:51. I trade all the way down to the 1 minute chart. I do not recommend anybody doing that unless you have a good amount of experience, because if you're looking as somebody who's a little newer to, you might have a good basics of what a chart looks like, how to read it. But I am able to look at this chart and have a pretty good idea of what the other charts look like. So I can think, a 15-minute chart's going to be somewhere in between here is going to be 4 or 5 candles. And then I'm able to see, okay, in that candle, we came down here and reject in the 5-minute candle. And so my outlook on a chart is going to be different than yours. And it just takes time and practice. But I go down all the way to the 1 minute. And so my first entry was on 9:51. I believe we called it out. Or no, it came out 9:50 right here. So this is what I saw, right? So I have a 2-1 candle. So a 2 up, 1. I'm looking for a reversal down. And for the people who were in the chat, they saw as well that came down, if we came back up for a retrace, failed this order block, and then gapped up a little bit. And so I'm looking for a reversal to go down. Obviously, that was the wrong bias to have, hindsight. But me having a bias, I'm looking for a reversal. Here's an actionable signal. This was when I entered. My entry was 39.75, so actually a little lower than this. And my stop loss would have been, what did I say? 5 points. So kind of a wide stop loss. Your risk is going to be 5 points, so $250 on a mini. And this contract went for 1-to-1 risk reward, aka 100%. So I got to trim one contract, and then my others, I believe I cut closer to break even, just above break even to cover the commissions. And if you don't know already, I do not close anything until a candle close. So I don't have limits set for my stop losses. I just simply have this level set, and then I wait for a candle close. So obviously the candle closed over my stop loss break even. So, that's kind of the risk you take, but you'll see on the very next play why I wait until candle close, because we're in a market where everything's institutionally driven, and because of that, the banks know how to stop you out and mess with your psychological trading. So I, through trading Forex, know about liquidity grabs and how they work, and how they usually work towards the back half of any candle close. So the last couple seconds of a 5-minute close, the last couple seconds of a 1-minute close, you're going to see movement that might fake you out, and that's why I don't close until candle close. So that was the first one, only 100%, because, and again, 100% plays are going to be 100% of my risk. So if my risk is 5 points, the play went 5 points into profit. Just like options, if your option contract, your risk is a $1 contract, and your contract goes up $1, your play is 100% profit. Same concept. So next play. So we waited around for about 7 minutes, looking for a clean entry. We went short at 9:59, which I bet is this guy here. Nope. So on this candle, we went short, My entry was 56.75. It's a little higher than that. Stop loss was 3.5 points. So right at this level here. And I'll explain why. So my stop loss is going to be here because with the strat, if we break out this prior low, this is now a 2 down bar. And, you know, if you don't know what the strat is, don't worry if you're lost right now. Learn the strat and then come back to this video and then you'll see exactly why I did it and then it'll make a ton of sense. But for those of you who do know the strat, if this 2 down bar would have came back up and broken the highs, this is now a 3 bar. And a 3 bar tells me that it was just the first move of the 3 bar was a liquidity grab. And so if it does come and breaks this high of this candle that I'm hovering, I no longer want to be in the play because I know that the push down was just a liquidity grab and we're likely going to go higher up. So anyway, I was looking short. We took out this prior low. I said I don't normally trade 2-2 reversals, but this one I was already having a bias and we went down and this guy went for 300%. So we barely missed 350, but 3R. So, you know, if you're willing to risk $500 per play or $50 per play, you would have made $150 on this play here. And I believe this next one is the reason why we don't wait. Yep. So 10:28. 10:28. I sent an alert for a buy at 86.75. 86.75. Stop loss 2 points. And 2 points is pretty tight, but that's how you gotta do it sometimes. So if I didn't wait for candle close, I would have been out here and down $100 per contract. But we kind of whipsawed here, also known as a bull flag, or ascending triangle, whatever you want to call it. I knew that, you know, my stop loss, and I actually had it typed out, I was going to say it, but I was going to see if we stopped at a candle close. A good stop loss would have been here, right? If we break under this level, then we're going lower. And so, but I had a stop loss at 2. We whipsawed this close, and this is where you see the institutions. We immediately jump back up here to where it is still valid, and this play went for and then also here's another reason why this candle right here, which you can't see yet until I move out, went down but did not close, and so we're still in that play even though my stop loss was at break even. This play went for almost, nope, it did hit 550%. So if would I be willing to take an extra $100 loss if the candle would have closed down here to possibly make an extra, you know, $550? Absolutely. So that's that play there. I believe we had one more. Yep, 59. So I'm still short here. My guys who were in the call all knew I was still short bias, and we caught this whole move here. So I saw we failed this level here, and then we're in this order block, and I'm willing to go short because on the 5-minute chart I saw, I'm on the 21st. On the 5-minute chart I saw this, a 2-1-2, perfect 2-1-2 setup. I love those. Here we are. Here. 2-1-2. And so I saw that forming on the 5-minute. Again, top-down analysis is always pretty handy. And alerted at 10:59. Stop loss would have been above the inside bar, if I'm not mistaken. Stop loss was 3 points, not 2 points. I got in at 86. So I got in a little, this candle here. 3 points would have covered all these wicks here. and that play went for 450%. So that is the breakdown of today's trades. And then you guys have me for at least another 18 minutes. Any questions at all? Can be futures related, can be trading related, can be whatever you guys want. I will open the floor to you guys. We had a question.
Yo, Jesse. So, out of curiosity, how did you like become a trader for a prop firm? Like,
Yeah.
did they approach you and be like, "Yo, you're insane"?
No, they don't. They don't approach you. At least that's not how I worked. We'll have a full lesson about prop firms in a couple sessions, but basically, let me see. What are you guys seeing? You're seeing Google Chrome. Okay. So I originally went with my Forex funds, and so I'll pull up their website here. So you have an evaluation, and you pay for your evaluation, and this is what I would say will maximize your money more than growing a small account. So if you don't have an account in the several thousands, this is a good way to grow your account and stop wasting money on trying to. It'll just expedite the money making process, essentially, is lack for better words. So you pay for an account, right? So refundable registration fee. If you pass, you get it refunded, right? So if you take, for example, if you have $100, right? So an $84 account, $10,000 account, you have to make 8% profit on the first phase and 5% on the second phase. So there's a set of rules. You have to stay within their daily starting drawdown and overall drawdown. So you can never lose more than $500 a day or $1,200 total, and you have to make $800 in your first month with them. Your second month you have to make $500, and you get 2 months to make $500. So the first phase is much harder. It sounds very, very easy, but if I pull up, I think they have a blog here. Let me see. So that's essentially how you do it. I've had a lot of people tell me that it sounds super easy, that anybody should be able to do it, but they have statistics here somewhere. Trying to pull it up from them so you know I'm not just talking out of my booty. But there we go. So stats are back. So we'll take November of last year. This is the one they have stats for. They've paid out nearly $3 million of profit. So you know that you're not just getting into a rink-a-dink prop firm. They paid out $3 million of profit to their traders. 10% of people who attempt the challenge pass the first phase. So out of 100 people, right? Let me pull up a calculator so it shows even more. Can you see a calculator? Yep. So 100 people started the challenge, right? Now we have 10% passed. Of those people, 24% passed the second phase. So 24% is a pretty high percentage. And they even said that the start of the month was very high because their violation system was missing a lot of violations. So even less than this number. So 2.4 people now are funded. Of those people, 3% of those people made it to their first phase, or their first payout. So 0.07% of traders end up being funded by a prop firm. So when I say this is hands down the most lucrative way to make money, I'm not gaslighting. This is easily, with my Forex funds, you can get funded up to $600,000. With FTMO, you can get funded up to $4 million. With Mint, you can get, $400,000. With Mint, you can get $2 million. You know, so now my goal by the end of the year is to be funded by $2 million. I don't tell people what I'm funded with now, just a little personal, but it is several accounts. And so, you know, the risk here versus a small account is that if you fail, you lose $84, right? But it's the same concept as if you threw $84 into a high leverage broker like Cedar FX and then traded and blew it up. So for me, you know, if you're doing an 84, or if you have more money, do the $100,000. I just tell people to always do whatever size you can do at least 3 times. So if you have $500, you should be doing the $20,000. But think about it this way: your $84 investment, if you pass, and you've proven that you can make 8% in 1 month, you're now making $800 a month off of an $84 investment that you get refunded. So there's a reason we have a session all for prop firms and which ones I know are reputable. For futures, you can do, I work with Top Step. You can also do, wrong. So this is Top Step. They only let you run one account, but they have the same thing. I think you can get you get 20% off your first challenge. And they processed $3 million last year. And then there's another one called Apex Trader Funding. They let you run a lot more. So they're at 1.5 million already this year. But all these prop firms, they all have the same thing. Generally, it's going to be anywhere from 5 to 10% profit for the first phase, and anywhere from 5 to 10% profit for the second phase challenge. And you pay for the challenge, and then the reward is you get funded. Hope that answered it for you.
Yep.
I actually had a question.
Yeah.
Maybe some people have the same question, but can you go back over, like the collateral part of it and how it doesn't cost anything to actually enter the trade? Because I know a lot of people only trade options in our server, and that's kind of confused me a little bit. So I know some people probably have the same question.
Yep. So we'll go back to my demo account here. So let me see if I can pull up that. And it'll be in the Word document as well that I'll give to you for whatever channel. So margin requirements. And it's all going to be broker dependent, so that might be why I kind of sped through it. But this is going to be trade evates. So if you're not funded, right, so I'm funded so I don't worry about it. If you're not funded and you're funding yourself, you have to have an account for ES over 12,000, so whatever, 1155. But that is just so they have collateral for your position if you do, you know, if you're at expiration and you have to buy the contract, they have enough money in there. But per contract, you're tying up $550 per contract. So you have to have a lot of money in there compared to what you're actually spending. And then micros are going to be half that. So $11.55 or $55. And then, like I said,
Order rejected.
Oh, well, the markets are closed, so I can't show you. It doesn't cost anything to open up a position other than the spread because it is a linear contract, unlike options. Options are different because if I'm buying or if I'm selling a contract for somebody to buy 100 of my Apple shares at a specific price, we're dealing with more than just the underlying asset of Apple. We're dealing with what price Apple is going to be sold at. Here, we're not necessarily dealing with that. We're dealing with just, I want to buy 50 shares of the S&P or SPX, ES, whatever. And I will pay, you don't actually pay anything. You're just going to gain money as it goes up. And then the broker's kick of it is they charge you commissions. So did that clear it up a little bit, Trevor?
I'm honestly still confused, bro. I'm not gonna lie to you.
Okay, so I want to see if I'm kind of picking up what you're saying. So let's take the micros for example. It was roughly like $1,200 to essentially fund the account,
Yeah.
correct?
Yeah.
And then you're putting up basically 55 of those dollars per. I assume it's not called a contract,
It
is it?
is. It is. Yep.
But then you're putting up 55 of those dollars per one contract, and the 1,200 there remaining is basically in case you fuck up.
Right. So you have 1,100 or 1,200 bucks in this contract, right? Um, you have to have maintenance margin of $55 in your account at all times. Depending on your broker, and this is why it's the margin part is going to be a little more dependent on your broker. Like TD Ameritrade, they require you to have 100% margin no matter what. Trade of 8, I believe, only requires you to have 50% margin. But there's people that I trade with who trade with as little as $2,000 in a funded account. But as far as margin requirements, you have to have this. So this is your initial margin. So your account has to at least have this much, and then your maintenance margin is going to be the $55 per contract. Sorry. Let's see if it says it better in here. This is just a part of it that I don't deal with because I'm funded. Yeah, so some people require 50% of the contract. Some people require 100% all the time. This one might be a little better. So here you go. Don't care about VIX. Here you go. ES. Yeah, some require even more. I believe the minimum for Trade of 8 is, $2,000. So $1,500 for Interactive Brokers, but I believe this is Canadian. So I'm not sure the transfer rate of Canadian to US dollars, but I know it's more. But basically it looks to be about $1,200 for maintenance or for initial margin, then $50 per contract. But I do know that people trade with less. It just all depends on your broker. You can even open a broker with, an unregulated broker, so I don't put a lot of money in those brokers, but I've worked with brokers like Cedar FX that give you 500 times leverage, and you can trade, so it would be, whatever the price, 3,700 divided by 500, so you need $70 in your account, maybe even less. You need $7 to trade a full position of one lot position of SPX. So the margin is going to vary heavily dependent on what broker you go to. So there's not a universal one contract of ES takes up $1,000 of margin.
Order rejected.
Any other questions?
Yeah, so trading with Tradovate, I'm not I forget how to
Tradovate.
pronounce my
Yeah, you're good.
Tradovate, yeah. So trading with them, if you're trading the micros, you would need a $1,200 portfolio essentially to get started if you're trying to do the bare minimum.
That's what I understand. Like I said, I'm not funded, or I haven't funded my own futures account through these guys because I have funded accounts myself.
Yeah, understand.
So I'm not 100% unless I actually went through myself and opened an account. Let me see if they have a Google. I know there's a guy I trade with. He trades with a $2,000 portfolio and trades minis. So I don't think it's accurate that you have to have $12,000 to trade a full mini, Mike.
No, 1,200. Sorry.
No, no, no. I know, but they're saying that you have to have 12 or $11,550. But I have a guy who trades with a $2,000 account and trades minis. So that's why I'm I don't have an exact answer because my like Top Step, you can only trade two contracts for a 50K account and up to 25 for a 150 account. So I have my own requirements through Top Step, Apex, and my Forex funds, which is why I don't have to worry about margin. But it looks like your maintenance margin is going to be 550, but you have to have 12,000 with them. I'm not sure. I'll get back to you guys on the exact. I'll talk to my buddy who has an account and see if I can figure it out for you.
Yeah, thank you so much.
Yep.
It's just like a lot of us are, I mean, the majority of ZWM, as I understand, like we're all like 19, 20, 21, 20. We're pretty young, you know?
Right.
So to start out, we would probably start with the bare minimum, obviously after paper trading, just to learn.
Right.
So that's why I'm curious. Thank you.
Yep.
Does anyone else have any questions for Jesse before we wrap this one up? Take that as a no.
Okie doke. Like I said, I will be out of town tomorrow and Friday. I believe we have it scheduled Tuesday to Friday next week. And the lesson plan I think might change just a little bit because we did half of next week's or Tuesday's lesson today. So we'll see if we can add something else that they'd like or take Friday off, either one. So
For sure.
if you guys have any questions, I'm pretty active in here, so tag me. So tag me in the masterclass chat. And if not, we will work on getting this uploaded for you as soon as possible. And let me know if you guys need anything.
Cool. Thank you for your time, bro. We appreciate that.
No problem. Have a good one, guys.
Thanks, Jesse.
Yeah, no problem.